The consumption demand slowdown in the country is biting hard, and Indian companies are finding it increasingly difficult to get the Indian consumer to spend more. However, it is turning out to be a rough road. Let's take the December quarter FMCG results for instance. According to Kotak Institutional Equities, the aggregate revenue growth of 11 consumer staples firms has dropped to 3.4% for the December quarter. Hello, my name is Pallavi Pengonda and you're watching Mint's Mark to Market show. Mark to Market is Mint's comments and analysis column where we look at market moving news and developments. Today on the show, we will discuss the performance of FMCG companies for the December quarter. As I said earlier, the aggregate revenue growth of 11 consumer staples firms has dropped to 3.4% for the December quarter. The same measure stood at 5.2% in the September quarter. Of course, some companies were able to perform better, especially the bigger companies which have a vast distribution heft. For example, Hindustan Unilever Limited was able to clock an underlying volume growth of 5%, which pleased analysts, even though the company's overall revenue growth had missed street estimates slightly. Nestle India too performed well, clocking a revenue growth of 8.7%. Dabur India too did not disappoint with a revenue growth of about 7%. The worst performer of the lot was Bajaj Consumer Care, which saw its revenues decline by about 8%. Marico's revenues too declined by 2%. But what about profitability? Kotak's consumer staple aggregate profit after tax growth for the December quarter was 18.4%. This was slightly lower than 20.1% seen in the September quarter. While the profitability picture is comforting, investors can't breathe easy yet. That's because the demand environment continues to remain tough. In the absence of meaningful stimulus measures in the union budget, the companies have extended their expectations of recovery by another 2-3 quarters. Plus, rural demand continues to be an area of pain where rural markets are growing at about 0.5 times that of urban demand growth. At the same time, some analysts are also worried about the incremental pressure that can come from the moderation in urban demand. What also adds to the discomfort is that management of many companies have sounded guarded on the near-term growth prospects. Despite that, stocks of some companies such as Hindustan Unilever, Nestle and Dabur India have touched a new 52-week trading high in 2020. According to analysts, the street is willing to reward companies that are able to perform relatively better at a time when market conditions remain so tough. That's all for today on the Mark to Market show. Stay tuned for more information on our website. Thank you.